as of yesterday's close, I was thinking like, shit, man, that's kind of cool. But it's interesting too that even today's price action, you can see that they've actually left a price gap in here. So that we are coming back to this level. Question here is this done for the short term? And if I'm not mistaken, where we are right now, this trend line we're flirting with is basically the trend line off of this bottom here. So you might even argue that if we do see, this was awfully flat. So the scary thing is we might have to work our way all the way back down right against these lows, eat that tail. So a couple of things about this chart that really jumped out at me, probably better to see it on the March, is somebody posted this in the lounge this morning, and I thought this was actually a really good observation. Somebody tweeted out that 32,862 is where the December contract was going out. 32,832 on the minis, micros, I guess. So basically, between that 32 and 62 window is probably where the market needs to trade to in this March contract. Because the March contract now, if you just think about it in simplest terms, the March contract is the next institutional contract that the big boys will strap on. And if they want to be long or short the market, then they want the same level. And so somebody pointed out that actually very regularly, the December contract will go out at a certain price, and then they'll just take the next following contract, in this case, the March contract, and work its way down to that corresponding level. So you can see 32,959 right now, and we needed to get to 32,832. The low that was put in there just 20 minutes or so ago was 32,928. So we still got another 100 points or so, and that would take us. You can see the ATR right now, 32,816. And we have this bearish bot objective, 32,803. Well, maybe they're going to rally the market back. I did notice yesterday that they did this kind of pattern. And actually, there was a buy setup that came in at about 10 o'clock yesterday morning. And that was basically this. We had, this was the trade from yesterday. We had a 2.618, the Foggenbaum off of that huge top pattern, bang. A megaphone bottom trend line level. And really, you could even argue, I don't know whether we'd hit that 61.8, but even down in here is 50% of this entire range. So I actually didn't mind the idea of hunting longs in here. If I got like a nice little inside bar reversal or something down in here, you can see there was room for dead cat bounces back up here. And I might even argue that this gap right here should be filled in. And maybe that's what the destination is for the Santa Claus rally. So as we were sitting there listening to Julian chit-chat away, I did notice this bull div started to form, and Willie was stupid. So technically this is my L Tango Nader setup. And so, I'm following my plan, just taking trades. You can see the double bottom came in here, and actually the trade worked out pretty nicely. We had the market zip up to 50% of the 2-to-1 objective. And I just have a simple rule that on that event, which actually happened here, I get to move my stop to scratch. So that was at this point. And then you can see this was the 2-to-1 level. Boom, that was hit. I let one go. So feeling pretty good about the trade there. And then I just let the remaining two contracts trail. There is that 50% level of the entire formation. But the market started to run out of steam. And I have a rule that because this is a day trading contract, futures, I have to close everything out 10 minutes before the close. So I just liquidated the position there. So, I mean, hey, at least it was a profitable day. What the hell? And I used to work with a guy years ago who you could have a market down massively, but he'd be up a couple grand on the day just being long the market. And you wonder, like, how the hell does that happen? So actually, yesterday was a good example of that.